Kind of a frustrating close there, KG.
Yeah, just a little bit. I mean, we slid over 60 points. Yeah, I mean, that's not the close that you wanted to see. Now, we were kind of talking about it earlier. This was really call side driven for today. So we probably just had a liquidation of those calls and just the unraveling of the market. And I think there's, once again, a little bit of fear about overnight risk that's happening when you're looking at Japan and the carry trade and things of that nature. So overall, we're still up 1% on the session. So it's still a green day, but an ugly close, to say the least here.
Yeah. Leadership just didn't really coalesce around the key stuff. I mean, we had CrowdStrike, which had a good day, Caroline, but it was kind of a mixed bag of staples, utility, energy, healthcare, as far as like specific stock movers. The sector for tech was solid, up more than 1%, but by the time the close came around, it was real estate, banks that were the two biggest winners. That's not exactly your heavy market cap bull theme.
No, not exactly. Even though NVIDIA was able to pull out the 4% gain, and it was just Apple and Alphabet, I guess, that ended up lower. But no, I mean, every sector in the S&P 500 was green, though. So it was overall still a pretty good day, especially after yesterday. I think it just kind of went to show that maybe the growth scare might have been a little bit overdone. But a lot of earnings movers to the upside today, including some of the names that we're going to be talking about today, too. So it makes you wonder if those expectations could be setting themselves up for a little bit of failure. Because if you take a look at some of the names that we're going to be looking at the reports for, Airbnb was up 4%. Looks like it's turning lower now. Supermicro was up. VF Corp, Wynn Resorts, all up. Wynn up 4% heading into that report. So it makes you wonder if the bar is just notched a little bit higher now.
Yeah, we've got some earnings here. Some interesting stuff. Supermicro being the highlight, but Wynn Resorts is out. And we did hear the bull case earlier from George Young at Villeray for Caesar. I happen to be a Wynn fan. Caesar is solid as well, but Wynn's the spot. All right, but it is getting hit here. Dividend's going to hold at 25 cents, no change there. The Las Vegas operating revenues beat expectations handily by about 30 million, 628.7 million they reported, and total operating revenue 1.73, a tiny bit shy. So seems like that implies some China weakness, perhaps. KG, anything stand out to you?
Now, still going through this report, but I think the market is bracing for some weakness when it comes to China, because obviously we've seen some lackluster data coming out of China at this point, and they've been able to drive a lot of their growth because of pricing pressures too. I mean, that's something that's been in the bag for them, but they are seeing a leveling off when it comes to volume. That could also hurt them when it comes to the bottom line here. So I think right now, Las Vegas, that's a good thing, but you got to look at some of these other areas like Wynn Macau and then some of these other areas that they have exposure to. That has seen some significant cyclicality over the last couple of years.
Yeah, and very negative cyclicality when it comes to China. However, the optimism has been building that would return to form. Most analysts have had a buy rating on this. There's been a lot of optimism on it. Their estimate for occupancy was close to like 99% for Macau. So, I mean, there's definitely hope that that's returning to form. If they beat that, they hit 99.4% occupancy. So it's not terrible, Caroline, but earnings a tiny bit short, maybe hurting the stock a bit.
Yeah, just looking at the expectations versus the actual numbers here, operating revenues for Macau, $337.3 million for the second quarter. That was an increase of $35.7 million from the same period a year ago. Las Vegas came in at around $628.7 million for the second quarter. That was an increase of about $50 million. So not huge, obviously $50 million is, a big number, but not huge increases. Encore Boston operating revenue, $212.6 million. That was actually a decrease of $9.3 million from the second quarter of 2023. So it certainly seems like the street isn't necessarily happy with this report, but as I said, shares were up about 4% heading into it. So let's see what they have to say on the earnings call. Just in terms of, we learned today that consumers are still certainly ordering Uber Eats and riding Ubers and such. So we'll see what the gambling demand is like.
Yeah. I think it's largely there, but maybe some difficulties in wringing out as much profit as investors were hoping for. The Boston property also disappointed a little bit there. So that one I think is kind of a sleeper kind of catalyst for them, a story that's been doing really well, but still a smaller section. Let's talk Airbnb. Big move there. Airbnb down in the aftermarket, and at 130 bucks it closed. We just hit 112. The bottom line looks like 86 cents for Airbnb. The top line seems to be roughly in line with about 2.75 billion in sales, but shares are getting hit. Outlook says slowing demand from U.S. So I don't know. What do you think, Caroline? Maybe some of those work from home travelers maybe reining in their expenses a bit?
I think that the work from home bump has kind of faded for the past few quarters, but they really have been benefiting from the rebound in travel overall, especially internationally. Doesn't seem to be the case or enough to make it beat expectations, though, because EPS of 86 cents is a miss. I have estimates as high as 92 cents here on revenue of, as you said, $2.75 billion, so largely in line. But it looks like the outlook is what's falling short of expectations. Q3 revenue is forecast to come in $3.67 to $3.73 billion versus consensus of $3.84 billion. So that's a miss in terms of outlook. So Airbnb shares, which were higher heading into the close, or closed higher, up about 4%, moving in the opposite direction right now. So all of that enthusiasm has kind of been taken out. I think that this is going to be important because the commentary was all about how the Paris Olympics caused bookings in the city to swell by 400%. There was the 40% increase in active listings. So, I'm curious to see some of the commentary that they have to say, especially after Barcelona said it won't renew any tourist department licenses after they expire. It's not for a few years from now, but just in terms of the overall commentary from both Europe and overall demand, because, that's an outlook that's pretty disappointing.
I wonder if there's a silent Airbnb boycott going on, because I have been doing it in my own head. I've gotten so frustrated from trying to book trips that are misrepresented in their cost. Like, it is awful. The experience of that website has gone so dramatically downhill. I feel like there should be a law against it. I mean, I'm not exaggerating. And I'm airing my dirty laundry here, because to me it's very frustrating. I hate when things aren't transparent. But I go to hotels.com, I book something at a hotel, all right, I go to a hotel tonight, there's gonna be like a $20 fee. Okay, I get that, occupancy fee, whatever. Airbnb, I've done the math on some of the listings. Like, let's say you want to host a bunch of people and it's a big place. You can get you will be advertised prices that are like 30 to 40% cheaper than they actually are. It's absurd. So the whole search process is absolutely awful. There are so many hidden fees at this point. It's disgusting. You'll see something that's like, oh, it's $1,000 a night, and then it turns out it's actually like $1,500. It's insane. So I don't know why people wouldn't just go back to using hotels at this point. Rant over, Kevin.
$1,000 a night. I mean, yeah.
It's absurd. There will literally be like a 30% difference between what you actually pay and what they list.
Yeah, I'm just saying, maybe stay at a Motel 6 or something. Who knows?
Well, I'm saying for groups of people, you got like a birthday or something.
Yeah, look, it's not only just top line, bottom line, and then the guidance miss. You're looking at gross booking values also slightly missing the street's expectations. And then when you're looking at gross nights booked, that actually missed pretty handedly here. That actually came in at 125.1 million. She was looking for 126.4 million. So, I mean, this is across the board. It's not only just the fact that they are not able to manage expenses. That's really not the story. It's a slowing story. And you kind of go back to the fact that maybe they did just grow grow way too fast during the COVID era, and they just have not been able to right-size their business. That's one. And then two, the competition within the space continues to get better and better, as you're kind of talking about the frustration when it comes to fees. But what are some of the other competitors like an Expedia or Booking.com? I mean, it seems like they're really taking a lot of market share here when it comes to Airbnb, and their strategy trying to get out to the burbs, which is a little bit more profitable, also seems like it's slowing down too. Maybe it's also residual effects coming from the individual that's just not working out of an Airbnb for a month or 2 months, right? I mean, this is probably a shift for them.
Yeah, no, for sure. I think that's a big part of it. That people have dialed that back now. That was a really nice kind of post-COVID luxury when stimulus was still flowing through the economy and we were a little bit more juiced up. By the way, I found the tweet that I posted some time ago. It was listed as a $225 a night room that had a cleaning fee of $125 and an Airbnb service fee of $49, bringing it to $399, which means that the hidden fees were 70%. Like, that's just unreal.
I don't think the cleaning fee is hidden, though, because Airbnb, I hate
when you
paying
search,
it,
though,
but Airbnb makes it clear that you have to pay that cleaning fee. But, Oliver, just to compare your $1,000 a night searches, even though that one doesn't necessarily, the average daily rate or cost per night grew about 2% to $169.53. If only they gave that metric after fees, we could actually do the difference. But just to see how you compare with the rest of Airbnb users. Also, they did talk about that they're expecting moderating growth in the third quarter, and that they obviously, we saw that with the outlook, but they're experiencing shorter booking lead times globally, similar to what we heard from Booking as well. So I think that's kind of important just as we head into the end of this year too, just that there's less time in between when the trip is booked and when people are actually taking it. So maybe a little bit more spur of the minute, and not consumers aren't willing to spend quite as much on travel right now.
Yeah, even though we've seen them flying, I think that, like, look at Booking, for example, like Booking.com, like, that we talked about earlier. I don't remember if it was Caroline or Kevin, but as you guys mentioned, I mean, like, that company has done so well, and it seems like has taken back a lot of the market share that maybe at one point was lost. So, all right, no super micro. So I could do one more rant about Airbnb hidden costs if you guys want. Otherwise, I think we can probably just wrap it up.
No, but VF Corp is out.
Oh, okay, all right.
People
Let's talk some vans real quick.
Vans and
how bad is it, Caroline?
It looks pretty. Well, actually, no. It's a narrower than expected loss because the expectation
still
was for a loss
right?
of 35 cents, and it came in at 33 cents. So yeah, still a loss. Sales of $1.91 billion actually beat analyst expectations of around $1.84 billion. So actually beat on both the top and bottom line there. And we're seeing. I'm not seeing a whole lot of reaction right now, but that might be our winner in terms of just despite the fact that it's posted a loss, it was a little bit better than expected. Yeah. All right. Stock's actually repaired itself a little bit since the last couple earnings bombs. The one earlier this year that went really, really wrong. So, all right. We got Rivian out too. We got to get to next. So we got to jump. Thank you very much.